In fact, the seer claims that Chief Minister Siddaramaiah has backed the separate religion demand by the Lingayats. So that's the latest that's coming in from the state of Karnataka. Amid Lingayat religion push, Chief Minister Siddaramaiah claimed that his stand is that of the people's stand, and to which the seer lauded his statement and said that Chief Minister backs their separate religion demand.
ಸರ್ ಅವರು ಲಿಂಗಾಯತ ಧರ್ಮದ ಬಗ್ಗೆ ನಿಮ್ಮ ನಿಲುವೇ
ನನ್ನ ನಿಲುವೇನಿಲ್ಲ, ಜನಗಳ ನಿಲುವೇ ನಮ್ಮ ನಿಲುವು.
ಸರ್ ಅವರು ಲಿಂಗಾಯತ ಧರ್ಮದ ಬಗ್ಗೆ ನಿಮ್ಮ ನಿಲುವೇ
ನನ್ನ ನಿಲುವೇನಿಲ್ಲ, ಜನಗಳ ನಿಲುವೇ ನಮ್ಮ ನಿಲುವು.
ಬಸವ ತತ್ವ ಲಿಂಗಾಯತ ಸ್ವತಂತ್ರ ಮಾನ್ಯತೆಗೆ 12ನೇ ಶತಮಾನದ ನಂತರ 12ನೇ ಶತಮಾನದಲ್ಲಿ ಅನುಭವ ಮಂಟಪದಲ್ಲಿ ಮುದ್ರೆ ಬಿದ್ದಿತ್ತು. ಸ್ವತಂತ್ರ ಧರ್ಮ ಅಂತ. ಆ ನಂತರ ಅದೇ ವಚನ ಸಂವಿಧಾನದ ಮೂಲಕ ಸರ್ಕಾರ ನಡೆಸುತ್ತಿರುವಂತ ಸಿದ್ದರಾಮಯ್ಯನವರು ಸರ್ಕಾರದ ಮುದ್ರೆಯನ್ನ ಇದು ಬಸವಣ್ಣನ ಧರ್ಮ, ಅದು ಸ್ವತಂತ್ರ ಧರ್ಮ ಅಂತ ಮಾನ್ಯತೆ ಮುದ್ರೆ ಒತ್ತಿದವರು ಸಿದ್ದರಾಮಯ್ಯನವರು.
ನೋಡ್ರಿ, ಒಂದು ಹೇಳ್ತೀನಿ, ಬಸವಣ್ಣನವರು ನಾನು ನಿನ್ನೆ ಹೇಳಿದ್ವಿ, ಎಲ್ಲರೂ ಭಾರತೀಯರು. ಭೌಗೋಳಿಕವಾಗಿ ಹಿಂದೂಗಳು, ಭಾರತೀಯರು. ಈ ರೀತಿ ಯಾವ ರೀತಿ ಸಿಖ್ ಮತ್ತು ಬೌದ್ಧ, ಜೈನ ಇದಾವೆ ಏನ್ರಿ, ಭಾರತದಲ್ಲಿರೋ ಎಲ್ಲರೂ ಕೂಡ ಹಿಂದೂಗಳು. ಆದರೆ ಇದು ಒಂದು ಧರ್ಮ, ಬಸವ ಧರ್ಮ. ಯಾವ ರೀತಿ ಸಿಕ್ಕು ಮತ್ತು ಜೈನ, ಬೌದ್ಧ ಧರ್ಮ ಇದೆ, ಇಂಡಿಕ್ ರಿಲಿಜನ್ಸ್ ಅಂತ, ಆ ರೀತಿ ಇರುವಂಥದ್ದು. ಹೀಗಾಗಿ ಪ್ರಶ್ನೆ ಏನಿದೆ?
So, amid the Lingayat religion push in Karnataka, Chief Minister Siddaramaiah loses his cool at the minister when the minister asked about Siddaramaiah's stand on this issue. Karnataka Chief Minister Siddaramaiah said that he does not have a stand of his own and that people's stand is his stand. To which the seer lauded Siddaramaiah's Lingayat religion push. In fact, the Lingayat seer said that Chief Minister Siddaramaiah backs the separate religion demand of the Lingayats. So Karnataka Chief Minister Siddaramaiah said that he has taken no stand on the Lingayat community's demand and the people's stand is his stand. But the Lingayat seers see this as a positive remark and they lauded his Lingayat religion push. In fact, the seer also claimed that Chief Minister Siddaramaiah in fact backs their separate religion demand. My colleague Sagai is now joining us with more details on this. Sagai, the Karnataka Chief Minister, on being asked about his stand on the separate religion of Lingayat, said that he does not really have a stand of his own and the people's stand is his own stand. So how can we interpret this? Is he backing the demand of the Lingayats to have a separate religion?
If you notice that there are two sects of Lingayat, one is Veerashaiva and the other one is a regular Lingayat community, and people from both the communities are demanding that there should be a separate religion. And according to MB Patil, there was a resolution which was been passed in Davangere, where when Veerashaiva Mahasabha had a convention where they also said that they don't belong to Hinduism and they are a separate religion. And Lingayat community, especially led by few leaders like MB Patil, are demanding that Lingayat should be recognized as a separate religion. Remember 2013 to 18, 2017, there was a proposal in the first term of Congress government where MB Patil was the main person who led that particular revolution within the Congress, stating that Lingayat should be recognized as a separate religion. And it has boomeranged Congress party at that point of time.
Right.
Many people predict that Congress lost 2018 election because of Lingayat. Again, this particular demand for a separate religion has been raised again, but we need to wait and watch how the Congress government is going to take this forward.
Sagai, do stay with us. We're getting some more breaking news from the state of Karnataka. And now CM face Nataka rages on in Karnataka. Chief Minister Siddaramaiah advisor pitches himself as the Chief Minister face. The Chief Minister advisor stirs controversy, pitches himself in Chief Minister fray. Not just DKS, CM advisor Raya Reddy now also in race. CM advisor dismissed DKS as Chief Minister. In fact, he batted for himself. Power struggle talk now resurfaced as Chief Minister Siddaramaya's financial advisor Baswaraj Reddy asserted that Siddaramaya will complete his 5-year tenure while also pitching himself for the Chief Minister's post. Listen in.
I don't think Chief Minister Siddaramaya will be replaced. He will be the full-fledged 5 years Chief Minister. We are elected him for 5 years. If party high command want to decide, let party. It is up to the party to decide. I can't say about that.
Next Chief Minister is D.K. Shukmar in November.
Maybe. Even me also. I am not less. I am also senior than many of these people. I have elected him from 1985. Who knows? I may be. You may be. Anybody can be a CM. But I don't think Siddaramaya will be changed. He will be there for 5 years.
And let me now go across to Sakshi Batra of Business Today TV with all the updates of the markets in this business show. Sakshi, over to you.
Good morning and welcome to Market Opening on our brand new collab show between Business Today and India Today Television. I'm Sakshi Batra. It's 9 a.m. and we are here to get you ahead of the curve as the market starts the trading session yet again after claiming 25,000 mark in yesterday's trade. First up, let's take a look at what's hot in the corporate and the financial space. Tech stocks rally on the Wall Street after ChatGPT maker OpenAI signs a deal to buy thousands of AI chips from AMD. AMD shares jumped 24% in an explosive rally. It is now worth more than Coca-Cola or General Electric. Tesla also rallies 5.5% after it teases a new launch. Gold continues its climb to newer highs, crosses the $4,000 level for the first time in the overnight futures trade on COMEX. Goldman Sachs now sees it at $4,300 an ounce by the end of this year. Investors spooked by the US government shutdown and a political crisis in France, Bitcoin also trades over $125,000 for the very first time. Tata Capital issue has been subscribed 39% on the day one. WeWork sputters at just 13%. Market is now gearing up for the 11,600 crore rupees of LG Electronics issue that opens today. Investors are also looking for the listing gains as 2 main board and 5 SME stocks also get listed on the stock exchanges. SEBI also clears public issues of Lenskart and Wakefit. In a big move for Atmanirbhar Bharat, Defence Ministry has opened missile and shell production to private sector. Private firms in India are now permitted to develop and to manufacture missiles such as Pinaka, Akash and Astra class and even artillery shells ranging from 105 mm to 155 mm bombs, grenades and other ammunition. It's the perfect storm which could whip off a shopping frenzy of 14 lakh crore rupees this festive and wedding season. Bank of Baroda report says GST rationalization cuts, income tax relief and pent-up demand and low inflation are contributing to this shopping spree. Clothing, marriages, electronics, autos, all of it to contribute the most. All right, let's straight away look at how the markets are shaping up right ahead of the open. In the pre-open trade, you're looking at mild uptick on the gift Nifty, and that's on the back of the global market cues that we've been getting overnight. We did see S&P 500 and Nasdaq again zoom to record levels in trade. It's the consecutive 7th session when the US markets have been logging in positive moves, all amidst a US government shutdown. Now, when we look at the Nifty, it's indicative of a positive start, mildly positive, 25,000 11,085 is what we are given to understand as of now. Let's look at how the Asia markets are trading this morning. We've been looking at across the board, again, a green screen, especially led by the Nikkei. Second day in a row when you're looking at the Nikkei up at record high levels as well. So all of this sentiment is again coming back into the Indian markets. Remember, we started off this week on a positive note. It was the Nifty Bank as well that crossed past the 56,000 mark. Again, we are looking at inching higher for the second consecutive session today. Of course, there'll be a whole host of sectors and stocks that will be in focus. Yesterday, it was the banks and the IT, the heavyweight sectors that pulled up the sentiment. Remains to be seen right ahead of the earnings season that kickstarts for the IT sector and for the entire, stock market related stocks starting this Thursday. How is the sentiment going to be picking up pace as well? Now, we're going to be, of course, looking at all of those stocks that will be in focus throughout the course of the day. But let's also look to welcome our guest on board. Mr. Dharmesh Kant will be joining in, Head of Equity Research at Chola Securities, very shortly. But let's quickly look at all the stocks that matter for all of you today. Now, of course, remember, we will also have the IPO space that will be buzzing in action. Day 2 of Tata Capital IPO. Day 1 of LG Electronics IPO will also be in focus as well. Apart from this, we will also be looking at, of course, all those stocks that will be in focus today, including the telecom stocks as well. We've been looking at how subscriber additions have been reported for the month of August for Bharti Airtel, for even Reliance Jio at large as well. And we are going to be seeing all of this space also in focus today. Of course, apart from this, there are many other stocks that you need to keep an eye out on that will be in focus, including LTI Mindtree. We will also be looking at many stocks. Talk about LTI Mindtree, the IT solutions provider, has announced a multi-year agreement with a leading global media and entertainment company, marking the company's largest strategic deal to date. And of course, the deal builds on the long-standing partnership between the two companies. And under this agreement, what we are given to understand is that LTI Mindtree will support the client's digital transformation services and also streamline operations and modernize them as well. So that stock will be in focus. We've been looking at on your screens a lot of other stocks as well. Bank of India will be in focus today. Business update has come in for the quarter as well. On a year-on-year basis, we are given to understand that the domestic deposits were up by 8.5% for the bank at 7.3 lakh crore rupees. The gross advances also increased by 13.9% as well at 7.1 lakh crore rupees as well. So that's also going to be extremely positive for the company, and the stock is already reacting positive in the pre-open trade. 4 minutes to go before the markets also coming into focus as well. Let me also go across to Dharmesh Kant now and understand from him how he looks at the markets in today's trade. Dharmesh, warm welcome. Good morning to you. Well, we started off this week, which is the earnings focus week, on a positive, start. At this point in time, how are you looking at navigating all the trades and, of course, the triggers in the markets as well? What are you keeping an eye out on? Earnings focus sectors like IT, banks, which have been outperforming. It's the 6th or the 7th session for the Nifty Bank, also on a higher end as well. Or are you continuing to look at something that we were focusing last week on, the consumption theme? What's your focus?
Yeah, good morning, Sakshi. Good to see you back. The bank updates were very good. This was an exceptional kind of update by the public sector banks, though we were expecting such kind of an update, and that's the reason why a couple of weeks back we initiated coverage on Bank of India, which was anyways there in our basket from last Diwali onwards. So public sector banks update, 14% kind of growth was good icing on the cake on backdrop of all the macroeconomic reforms which has been done by Government of India, and tailwind seems to be playing out now. The only worrisome caveat was the small banks and the financials which have reported their advances growth in single digit. So that means the lower section of the society is still not picking up to the economic tailwinds which is likely to play out. So that has to be seen. Overall, I think the market is headed in for a good swing till Diwali. It's a swing trade which will play out, and market is hungry for good news. So wherever incremental or slightly incremental good news is there, you can see the pop-up on the stock prices going into those kind of a news. So it's a market for news, and good and better news are to be rewarded by the market. And till that time, traders will have a happy hunting ground for them. As far as investors are concerned, the one basket which should now be looked at more seriously from investment perspective is the entire banking space, both public and private sector, though the weightage this time should be 60% on the public sector banking space and 40% on the private space.
Fantastic. Dharmeshji, there is also a dichotomy. Investors are right now confused how to use the free cash that's available. Should one deploy it in the secondary market or in the big buzzing, the IPO space? We have two large IPOs that will be open for subscription today. Tata Capital entering day 2 of 15,500 crore rupees IPO, the biggest IPO of 2025. And LG Electronics with 11,600 crore rupees IPO also opening up in trade today. So together in just about 2 to 3 days, we are going to be seeing 27,000 crore rupees of funds to be raised again from the equity markets. Do you see some kind of a sentiment impact on the secondary market because the IPO liquidity will be too high?
Not at all, Sakshi. I mean, there's plenty of funds lying with all the domestic institutions and high net worth individuals to be deployed into the market. This is not even 2-3% of what is the fund lying to be deployed. So this will be absorbed very easily by the system. And secondary market impact because of such kind of IPO squeeze, I don't think is likely to be there. And out of the two IPO on Tata Capital, we have a neutral rating because it's been fairly priced. And there are the growth factors.
And you have the markets open. Let's quickly focus on that. Dharmeshji first, 25,128. We are looking at a positive start, 0.2% higher in trade for the Nifty at this point in time. Let's also look at the Nifty Bank also pulling up higher, 56,154, about 49 points higher in trade for that one. The IT stocks continue to buoy higher. You can see a 0.1% of a move on the higher end as well. Let me look at the other aspects. All the sectors are looking up, barring just about media stocks that are lower in trade. Look at India VIX, that's also climbing a slight bit higher in trade. Oil and gas, metals, realty, infrastructure, these are the sectors that are moving on the higher end. On the Nifty, which are the top stocks that are buzzing? Coal India is the top mover today, 1.1% higher. Bajaj Finance, Power Grid. You also have L&T, oil and natural gas, Eicher Motors, Wipro. These are all the stocks that are buzzing in trade in the opening action. When we look at the ones that are declining, you have Trent. Remember, there's a brokerage report which has cut the target prices for Trent, and therefore you see a 2.5% drop there. Axis Bank, TCS, these are other stocks that are down by about 0.5%. Even Indigo is facing losses in the trade because Investec has come out with a report, and others as well that believe the weakness in the next quarterly earnings can continue as well for the company, and therefore you see some weakness on that front. But yes, telecom related stocks that we were marking out, Bharti Airtel is opening on a higher zone. So let's keep an eye out on that as well. When we look at any stocks from within the broadest index that need our attention, Bharat Seats is up from the auto ancillary pack. Then we have a few more stocks that are just getting into action. We'll come back to that in a bit. But let's continue to come back to Dharmeshji. Dharmeshji, you were talking about the IPO space, but the secondary market so far is looking all okay. Even the economy-focused sectors, metals, oil and gas, infra, they're also coming back into focus. How are you looking at this shift?
I mean, this was a shift which we always expected, if you recall our last conversation a month back. So FMCG was a basket which we were not very, bullish on. The auto pack we were. So consumer durables, I mean, mainstream economies, infra, cement, building materials, these are the sector which is likely to benefit more as far as the consumption is concerned, and the higher disposable income will go there rather than, toothpastes and soaps and detergents or beauty products. I don't think there will be more application out there. And the numbers which have been reported, for example, Marico, the volume growth has been quite dismal, and there would be gross margin impact on most of this company because of the higher input prices. So this quarter earnings is likely to be, neutral to negative kind of earnings from there. Next quarter also, we don't expect a meaningful upside. The expectation is on the mainstream economy facing segments, and those remain the infra plays as well as the consumer durable plays.
Absolutely. In fact, when we're talking about the consumption, remember, in a major boost for, the kind of consumption space that we've been looking at, Bank of Baroda has come out with a statement that they believe this festive season is likely to see a bump up of 12 to 14 lakh crore rupees with the kind of consumption that's taking place. In fact, let's go across to my colleague Chetan, who's joining in to share more updates on that. Chetan, help me understand what are the key insights from this report. Of course, this festive season information was given to understand that the consumption boost will be there, but 12 to 14 lakh crore rupees, which are the top sectors that are contributing to it? What does it mean for the overall economy?
But Sakshi, pointing it out, 12 to 14 lakh crore is indeed a big number for 3 months consumption revival pattern, because the government has always been of the opinion that since the GST cut would be announced, it would, fulfill the deficit through the consumption. So they'll have to wait and watch as to what real numbers come out. But yes, as per the BOP report, 12 to 14 lakh crore is the spending that would happen during the festive season from October to December. Clothes, footwear, furnishing leading the pack with about close to 3 lakh crore spending. Automobile, of course, 1.5 to 2 lakh crores spending. Electronics, 1 lakh to 1 lakh 20,000 lakh crores. White goods, TV, AC, fridge, washing machines also leading the pack with nearly about 50 lakh crores to say so. One very interesting highlight is the fact that this report does not include two things, which is gold and alcohol. Of course, alcohol being a sin good will be more in demand during the festive season. And secondly, gold, all touching all-time high. That has also been excluded from the report. So these are the 3 to 4 sectors, and GDP growth for the first quarter of FY26 has been pegged at close to about 7%. So I think that's a great development for overall spending and economy as well.
And in fact, Chetan, the sector that you cover very closely, the auto sector, there's report coming in from FADA, which has actually marked out that the auto retail sales were up 5.2% year on year in September of 2025, driven by largely the GST 2.0 rationalization as well as the festive momentum. What are the insights that you have to share with us? What is FADA really talking about? We were trying to understand what this GST cut will lead to. Which are the segments of the auto industry that will benefit the most? Initial reports from the dealership helped us understand it was smaller cars that was seeing a large part of benefit. Has that come in the FADA report as well? What are you picking up?
Sakshi, a record-breaking 34% historic surge year-on-year during Navratri was witnessed in this year, and dealers pointing out that this is the highest ever surge during the festive season, which is a 34% year-on-year during Navratri.
Okay.
To pointing it out, auto retail sales up 5% year-on-year, September 2025, driven by GST 2.0 and festive momentum. Two-wheelers leading the pack is, of course, Hero MotoCorp with 25% market share, and Honda nearly 25%. Maruti Suzuki leading the passenger vehicle market with 41% market share, followed by Tata Motors 13% and Mahindra 12.6%. Also, segment-wise Navratri, two-wheeler sales saw 36% growth, which is a massive number. Passenger vehicles saw 34.8%, again, a very good number. Three-wheeler growth also 24.5%. So clearly, all in all, we saw a great movement and development in the Navratri period to say so. However, we are yet to map the month of December, or the month of October for the sale of Diwali season as well.
And, thanks a lot for all that update. We'll definitely look for more details as and when they continue to pour in as well. And of course, the earnings will also reflect some part of this picture as well for these companies. Dharmeshji, coming back to you, you've been seeing how, economists are talking about a big boost to the economy because of the GST rationalization and the festive benefit. Now there's FADA report that's talked about a historic record move as far as the Navratri sales are concerned for the auto segment. What is your favorite segment to continue to see a boost going forward from here that will carry on even after the initial 9 days, 10 days of a move has been passed?
Yes, actually, first to, clear on this report. So the FADA report is two segments. One is for the month of September and one is for the 8 days period. So this 8-day period surge which you are saying, there's also a pent-up demand of 1 month. GST cut was announced on 15th of August. So many people deferred their sales and then they wanted to book on the Navratri period. Usually in a normal year, this doesn't happen. So it has to be taken with that, caveat into account. Whether this 36% was purely this 8-day kind of a movement or there was a 30-day, backlog also pending for these 8 days. So adjusted to that, we have seen 6% is the retail sales growth which has happened. However, on dealership basis, from company to, dealers, it has been 12 to 15% kind of a growth. That is the numbers which has been reported by most of the two-wheeler and three-wheelers. Going forward into October, we don't think 10-12% is gettable because last time Navratri and Diwali was both in the month of October. So the base is already high. Let's see what the number pans out. Even if it is 10%, is good. So auto, I think, is done with. For the timing, for the short term, they are built into the prices. We may see 3 to 5% kind of a movement based on the news flow, but structurally, the real movement will start happening from the month of, say, January and Feb, when we have seen normal December, whether the sustainability of such kind of a run rate is there or not. So this is about the auto bank. Otherwise, I think structurally, going into the budget session in the month of January and how the government spending is happening, infra, building materials, railway, defense should be the key growth driver. And now, since public sector banks are participating, they should also drive the growth forward. So banks included in this basket.
Okay. From autos then to healthcare segment in a major boost for nearly 50 lakh central government employees, pensioners and their families. Now the government has announced biggest overhaul of the central government health scheme or the CGHS. The first time in the last 15 years. This overhaul revises the package rates for nearly 2,000 medical procedures, remember, revises the tariffs for rooms as well as takes into consideration the accreditation of the hospitals as well. For more on this, we're now joined by my colleague, Business Today's Neetu Chandra Sharma, to share with us more details on this. Neetu, help us understand, what does the CGHS rate revision really mean for the hospital business at large? Will this increase their profitability? And what do you think of the healthcare market too?
Yes, Sakshi. So the CGHS rate revision directly affects hospital revenues and pricing strategies. So earlier, the CGHS reimbursements were lower than prevailing market rates, leading many private hospitals to limit or withdraw services. The new tier-based rate system with differentiated pricing for NABH accredited and super specialty hospitals now aligns with reimbursements more closely with actual operating costs. So hospitals will now be able to recover a higher share of treatment costs, manage cash flows better and renew MOUs with government on updated terms. So this makes CGHS linked business financially sustainable for organized hospital chains such as Apollo, Fortis and Max, which already follow structured compliances processes. So for the beneficiaries who are eligible for cashless treatment, this will have no effect, but for those who are eligible for subsidized treatment will have to pay more for the services now.
Right, but Neetu, how does this really change affect the beneficiaries at large and the overall healthcare spend by the government? What do you have to say on that?
Yeah, so the revision increases the government's healthcare expenditure per beneficiary as procedure rates have been updated across about 2,000 packages. The hospitals will now be reimbursed at rates better match services costs, reducing payment disputes and delays. So this supports more predictable revenue for empaneled hospitals and steadier cash flows across the system. So now for the government, the fiscal outgo will rise, but the arrangement helps maintain participation from private hospitals and ensures smoother settlement cycles. So overall, if we look at this development, CGHS is basically moving from a static reimbursement model towards a market-aligned structure that balances fiscal responsibility with operational viability, Sakshi.
Thanks a lot, Neetu, for that. Dharmeshi, coming back to you, how are you looking at the healthcare and the hospital-related stocks? You know, when we were talking about this entire tariff-related impact on the domestic industry, hospitals were being seen as beneficiaries because they had nothing to do with the tariff impact. And such domestic-oriented sectors were already getting preferred. Now, with the government also intervening, revamping the CGHS, that has been a long-standing demand of the healthcare sector as well. How are you looking at hospitals? Yesterday, we did see a sharp rally. Today there's some profit taking, but Apollo Hospitals, Max Healthcare, Fortis, how are you looking at these companies? Is it really going to be meaningful growth for them?
Incremental growth, definitely yes, because now a patient will have an opportunity to get the healthcare treatment done at private hospitals, because earlier the rate mismatch was there. I mean, government hospitals were a far lower rates than the private hospitals, so the patient had no choice but to avail that. But with this window and coming into play, they will have an option. But it's a very multi-layered structure. I mean, tier 2, tier 3 city discount. Sure. And it's a very detailed kind of thing which has to be seen into. But incrementally, I do think it will be EPS accretive for hospitals across the chain.
Absolutely.
And yesterday there was a movement, today there is a profit taking. But I think the topic for our end remains the Narayana Hridayalaya. The reason being their prices were always lower to the others in the peer set group. So patient will have more alignment out there.
Narayana Hridayalaya.
Yeah.
All
they
right.
won't have
Is
to
your
sell anything out of that. Yeah.
Okay, Dharmeshi, thank you so much. We're completely out of time now. But thank you for being with us. That's a wrap on the Business Today show, viewers. And in case you still have about questions on your investments, mutual funds, SIPs, or even gold-related queries, then please do send them to us on the number that's flashing on your screens. And don't forget to catch the market closing action with me at 3 p.m. today.
Good morning, ladies and gentlemen. Again, a very warm welcome to you on Business Today television. Our very special show, Market Masters, where you get to meet the finest brains on Dalal Street. People and professionals